Hey everyone, good morning. I hope you guys are having a great day. I'm seeing a lot of talk here recently, just like in different groups and among realtors and friends about the housing market crashing. And everyone's talking about, is it going to crash? Is this going to be like 2008? And there's a little bit of uncertainty out there right now about what's going to happen. And I love to like look at all the data and think through things before just like reacting quickly. And I pulled up the numbers on Williamson County and I started looking through all the different graphs. And it's funny, like the housing market really resembles to me the stock market. And I'm going to show you guys what I mean here. Let me switch my screen. Okay. So that graph right there is going back to like 2009 for the entire Williamson County housing market. And each data point is a monthly data point. And I think what's interesting, let me pull this up here like this. All right. I think what's interesting, if you look at these data points, look at all the months where we had times that prices went down. Look, going all back to 2009, there were several. It went up, down, up, down, up, down, up, down. Brrr. I mean, crazy. That is just like the stock market. The stock market does that. It goes up and down. It's never like a linear way up. There's always going to be down periods. So the interesting thing is, I'm going to switch my screen for a second. If you take the same data and you switch it, that is the exact same data, except instead of monthly, I changed it to a rolling 12 months. So this is Williamson County, if you're just joining me, and these are median home values going back to 2009. And look at how much smoother it is on its way up. There is a dip. You see right here, this is around 2010, right in 2010 going to 2011. But besides that, we're seeing a smooth, gradual way up. That doesn't mean, let me go back here so I can show you guys this once again. That doesn't mean, look right here, we saw a little dip down just like we saw a ton of little dips going down. And we could see some more of that right here. But I think over the long term that we're going to just still continue to see home values going up like we always have. And I think that's important for you guys to know that over the long haul, just like in the stock market, home values have gone up, especially here in Williamson County. I'm going to change this back to the rolling 12 months. So there it is. There's your median home values in Williamson County going back to 2009. And every data point is a rolling 12 months data point. If you don't know what that means, basically, each data point is 12 months of data. As you go to the next month, it includes that month's of data, and the 13th month falls off. And it's just like the stock market, guys. It's just like the stock market. We're going to have some dips over time, but for the most part, you're going to have values go up. So while we're here talking, so we've got median home prices right here. And in July in Williamson County, it was $775,000. I'm going to move down here to months supply of inventory. So this number is very interesting. For this one, I want to switch to monthly data. So look at how many months supply of inventory we had back in 2009, 14.1 months. We are on the way up for sure. I mean, we're up to 2.3 months in Williamson County, and I'm expecting to see that number kind of rise to maybe 3 or 4 months. But we're still, until we get way over here, we are nowhere near that crisis in 2000 and that we saw back in 2009 and 2010. Of course, I don't know what's going to happen. I mean, we could start to see month supply increase over time and get to that point, but we're just a far way off from that. And I really I'm looking at this data and I got to thinking about it. We're in the summer right now. I almost feel like the winter is going to save us. And what I mean by that is we're kind of having a rough summer for sellers, and the selling season's going to end. I mean, October, November, people don't really like to list their homes. You still see listings, of course, but I would say it's going to be slow from like October through March. Well, we're going to also see interest rates most likely go down during those times as well. So I really kind of think that winter is going to save us. I think that interest rates will go down. Now, as far as will they go down to levels like they were? No, they definitely won't. I mean, the Fed is just unloading these mortgage-backed securities and bonds like crazy into the market that they bought in previous years. And I think that's going to keep rates up at least above 4.5%. So anyways, guys, I really, the point of this video though, that I really wanted to show you is this right here. And home values have increased over time, but it was a rocky way up. Look at this. It was rough. It was not, this is month to month to month. We saw times that it went up, went down, and that's just how it's going to be. If you look at the data using the 12-month rolling data points, you can see, I mean, it got a little bit, it went down a little bit here, it got a little bit flat, but then we had this right here where it went up. Even if this dips right here, say it dips down to I don't know. I mean, heck, even if it dips down to 650,000, which would be quite a dip from 775 to 650. And then if it continues up, it's still going to be an upward trajectory over time. But yes, you don't want to buy at the highest point of the market and then sell when it dips, just like with the stock. I mean, guys, that's common sense. I mean, that's when you lose your butt. So it's okay if you buy at the highest point of the market. Just don't sell if there's a dip immediately after. That's really what happened back here in 2010. A lot of people lost their jobs and they had reasons they couldn't pay for their homes and they got stuck and had to end up selling. So that's kind of what I wanted to show you guys for today. So I appreciate you guys watching. If you have any questions, just leave them in the comments below. And hopefully you guys found this data useful. All right, guys. Thanks. Bye.